welcome to the Capital Discussions Roundtable. I'm Tom Nunemaker, and we have several guests today. We're going to be talking about Thinkorswim RTD based Excel spreadsheets. But before we get started with that, a quick disclosure. The Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And this is for educational purposes only. So today's roundtable is going to be a bit different than what we've done in the past. There's not one speaker. We're going to have a panel. And Neil Gillis has volunteered to show us what he's got as far as setting up a Thinkorswim Excel spreadsheet. And this whole idea is for tips, tricks, ideas, how to get started, and maybe tweak what you've already got. So welcome, everyone, and thanks for all the panelists. If anybody else is listening and wants to join, let me know and I'll promote you. But for now, Neil, so you have the ball, so you can go ahead and share your screen and get started.
Okay, you can see my screen now?
Certainly can.
Okay. I kind of want to start off, just give a little, I think I've done this before, but give a little bit of my background. I'm now a retired civil engineer, live in Orange County, California. I have 4 children. I've been married 45 years, long time. And what really got me into options and investing was in 2008, I was laid off. Since then, I've been retired I've been rehired 4 times. I've been laid off 3 times, and now I'm just kind of officially retired. And my investment background, I started there in the early 2000s with kind of a motley fool group. And in 2008, discovered Invest Tools. And at one of their presentations, Don Kaufman appeared, talked about options. And I wasn't really buying into what he was saying about options, but my son investigated. He found Dan Sheridan. And Dan Sheridan came out and made a presentation to a group that I was a member of, ended up offering discounts to people. My wife, or my son, my daughter, and myself, we all signed up with Dan and got a family discount from Dan. So we all joined Dan Sheridan mentoring and learned about options. And since then, it's just been kind of a continuous learning curve for me. I'm finally at the point where I think I'm a little bit comfortable with what I'm doing and actually can talk about it, but not too technically. I can't talk about it. I can talk about some of the trades I do. Anyways, because of my engineering background, I have a lot of experience with Excel. I actually started on spreadsheets with Lotus 123. That's how long I've been working with them. I didn't do a lot of programming, sophisticated programming, mostly just kind of brute force type of programming to do engineering, to solve engineering problems. A little while ago, I was in one of the Capital Discussions, watching one of the Capital Discussions webinars, and heard someone mention a series of lessons that was put out by John Locke, teaching you how to export data from TOS to Excel. Looked around, found them, and it's a series of 4 presentations that were created by Rick Kaczmarek. So I watched, or I took notes from those webinars. And let me show you what I've got from them. These are all on the web. And it's really a pretty good introduction to how to do download data from TOS to Excel. And basically, this is all it is. I download this information from what he posted on the web. And what I've got in these notes is the locations of where they are. They're all under Lock in Your Success, connecting Thinkorswim to Excel, and there's 4 parts to it. So if anybody wants to get an introduction to how to really do this stuff, that's a good place to start. So let me show you what the basic formula is for, and this is what I got from those webinars. The basic formula for downloading. Let me just here it is. The basic formula for downloading from tossed to Excel is this formula right here in this cell F14. It's equal RTD, parentheses, quotes, toss.rtd, close quotes, comma, comma. And then this term right here is whatever you're looking for, the bid, the ask, the last, delta, whatever you want. And then this part of the equation right here, that's the OPRA code for the, for whatever you want to look for. It can either be the symbol for the instrument like a stock, or it can be the OPRA code. And if you have the OPRA code in there correctly, you can get anything about that OPRA code by typing in the correct terminology at this location in that equation. So when I was researching this stuff, I think it was in Ed T's presentation to Capital Discussions about 3 or 4 weeks ago. He showed a spreadsheet that, I was really impressed by his spreadsheet. And as he rolled his cursor over the spreadsheet, he was clicking on various cells, and in one of them, he came across the term concatenate as a function from it's an Excel function. And what it actually does is it actually takes pieces, information in various cells and combines them into a single entity. And I figured out, I figured that out by looking up what concatenate means in the Excel help menu. So let me show you how they define that. Let's see. So here's Excel's concatenate function, a somewhat it's a somewhat convoluted description, and I have an example here that shows you a little bit easier on how to do this. If you have information in cells A1, B1, and C1, and you concatenate, you put the term equals concatenate in parentheses. If you say concatenate A1, comma, quote, space, quote, comma, concatenate B1, go through this whole series of commands. The result is, if I'm in cell A3, which that formula is in, what it's going to do is it's going to pick the information Armando from cell A1. It's going to pick the information Pinto from cell B1. It's going to put a comma in. Right here, it's got quote, comma, quote. It's quote, comma, quote. It puts this comma in. It puts a space in for that quote, space, quote. And it takes C1, which is 42, and it returns, that formula returns in this cell A1, Armando Pinto 42. Basically, from that little piece of information, I figured out I can figure out a way to put together basically an OPRA code for any option you want. Because there's a standard criteria for OPRA codes. So if I look at the standard formula for an OPRA code, the OPRA code is defined right here. The first symbol in the string is always a dot. Then you have the option code, SPX or SPW if it's a weekly. You have the year. You have 2 digits, year. Then you have the month from 01 to 12. You have the day from 01 to 31. You have to tell it whether it's a put or a call, and then you have to put the strike price. So the only issue that I had with trying to figure this out is if you put in the months, January to September, 1 to 9, all you put in is a 1 in this formula. In this formula that I put down here, I'll talk about this formula in just a second. But you need to have the 0 in there because it needs 2 digits to define the month and the day. Always has to have 2 digits. So if you're at 10 and above, October and above, you're fine. But if you're below that, it doesn't work as well, or it doesn't work at all because you're not giving it the information that it needs. So what I did is I created a formula that will return an OPRA code. And here's the formula right here. The first piece of formula is I want to put a dot in. I forgot to mention something with the concatenate. If you use an ampersand, that's the same as concatenate. This and symbol, that's an ampersand, and that just is, that means you're doing a concatenation. So in this formula, I say dot, combine that dot with whatever's in cell A20. A20, in this particular case, is the symbol. B7 is the year. And then I have to get into a little bit of a formula to make sure that I have 2 digits for the day, or for the month. So if the month is less than 10, I append a 0 to it using this. So if C7 is less than 10, I want a 0 to appear first, and then I want to have whatever that number is in C7. If it's greater than 10, if it's equal to 10 or greater than 10, I just want whatever's in that cell right there. So it'll be 10, 11, or 12. That's the month. Now I'm going to append in the day being same situation. If it's less than 10, I have to put a 0 in the equation or into the formula. If it's above 10, then I just put whatever's in this cell right here, D7. So it's either going to be 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10, 11 is standard. The next piece of the formula is a P for a put or a C for a call. And then I want to have the strike price. Now what I did, here's a spreadsheet that I created. I set this up so what it does is, here's the current price of the SPX, 2369.41. This is a live spreadsheet right now. So if you look at, let me bring up Thinkorswim. So this is Thinkorswim, 2369.64, 2369. It looks like I may have to update this formula. What's happening is sometimes the spreadsheet will freeze up, so I'll just close it and open it up again real fast. I'm not sure why. It seems to be lagging a little bit behind what's right here.
Neil?
Yes.
There's actually a much easier way to do this.
Well, there may be, but this is not real sophisticated, but it's what I came up with.
Could you do me a favor, just in any column, okay, in a blank column, just write down the number 9. Okay. Now right-click on it. Go on the same cell, right-click. Go to custom format cell.
Format cell?
Yep. No, I'm sorry. Format number. Format number is what I wanted.
Well, that's here.
Yeah. Okay. Go ahead. Go there. Go to custom. Bottom one. Now
0,
on
0.
put. You see where you end up having put in not 0, 0. You have to go in and click on the sample, where it says 9.
Click.
Up
Right
higher.
there.
Click there. Yep. Click there.
Yeah. I clicked there. It's not doing anything.
Maybe you have a newer version of Excel. Hang on one second.
If you're going to change that, you got to go to general.
No. Click on the underneath general. Click on the single 0. See the single 0?
Okay. Yeah.
Now go into the 0 and put in 2 zeros. Click above it. Put a second 0. Okay. Hit OK.
You know what? See, that's why you talk to people. There you go.
Yeah, I've been doing this a little bit longer. I started with VisiCalc back in 1980. Okay, so I've been doing Excel.
I started with Lotus 123. And I've done a lot of stuff with the formatting, but I didn't know about that right there. So, you always learn something. That's great to know.
There's also a function called text that you can put. I put it in the chat. You go text and then the cell and then double quote 00, and that'll format a cell. So you don't have.
Okay.
I think that format just changes the formatting of that cell, but if you want to use it in an equation, you probably should use that text function.
Yeah. Well, that was the problem. I think when I was playing with this initially, I couldn't get it to hold that 0 when I brought it into this formula right here. That's why I came up with this solution. Maybe I'll try that now after we do this. But anyway, the formula still remains. That will give you the OPRA code. So that's how I've developed that formula right there. I just took directly out of these cells down here. So here's the OPRA code that I've come up with for, I'm looking at the lower spread. So I'm looking at the lower long strike, 2270. There's the OPRA code for 2270 for today's date, you know, for basically for right now. Here's the bid. So what I then did is now you have to get the formula for how to export information from TOS. And that's this formula right here, which is RTD, TOS, ask. I'm looking for the ask price. If I come in here and actually take the little text symbol out of it to actually make it a real formula, and if I have this as I'll look at F21, that should return information. And there it is. There's the information, 9.2. So using that, that's the ask right now for that OPRA code. And here it is, put ask, $9.20. Here's the put bid. So what it is, I took the OPRA code and I created the bid. You know, I want to import the bid, the ask. I just add those two together, divide by 2 to get the mark. Subtract the 2 to get the spread. I'm always interested in open interest. Again, it's just a formula that says open interest right up here. And then I want to have the delta. So that same OPRA code, there's the delta. So, you know, if you can create the OPRA code, then you can set up these spreadsheets to basically do, you know, any kind of option chain that you want. What I've set this up for right now is an option chain for a butterfly, broken wing butterfly. What I've done is, if you look at this information right here, I'm gonna set this now so that so that we can look at both at the same time. What I've done with this spreadsheet is you would enter the symbol of the option that you want to look at right here. You have to tell it if it's a weekly or not, because if it's a weekly, then it has to append a W on this symbol right here in order to create the correct OPRA code. You tell it the number of lots that you want to trade, the expiration that you're trading, then you have to put in that same information needs to be put into these 3 cells so that it will create that OPRA code. With that information then, I can tell it, do I want my upper long strike to be above or below the market? If I want it to be below the market, I just put in a positive number here. And I say my upper long strike is going to start 10 points below whatever the market is. There's the current price. Now, what I've done is when I created these cells is you have to round. You have to know what the width of the strikes are that are available in the option chain, because the farther out options can be only 10 point or 25 point. So if I'm looking at April 21st, I know that 5-point strikes are available. If I'm looking at like May 19th or, you know, pretty far out there may be only 10-point strikes or 15-point strikes. Or 25-point strikes, I'm sorry. Let's take a look at May. We'll look at May 26th. It's now updating to May 26th. And then they have to open and close this again. Sometimes it gets hung up on the communication sometimes.
Wouldn't that be a weekly option?
Yes, that's a weekly option. To put in yes there, depends the W right here. And I don't know what options are available there right now, so I'm having a hard time. Let's go back to just the ones that we know for sure. Let's go to 21.
And that's going to be a monthly.
Yes. Okay. So here's the monthly options right here. So what I put together is, bid, ask, mark, spread, open interest, option delta, and I do it for each one of the lower wing, the short put, and there's another column, another series of columns here that's the upper wing. And what I do is I set up the formulas in these three columns so that I can vary the width of the wing. Like this is set up with a 100-point lower wing and a 75-point upper wing. And let's reduce this a bit, and we'll see. This is that same information right here. I've compressed. Here's my toss right now. That's this option chain right here, which is my active butterfly. So, given that information and the OPRA codes, what I can do is combine all of the option deltas. Here's the option delta of that entire position, minus 17.352. If I reduce this, you can see, no, it's not. Okay, we're back into the spreadsheet. So there's the position delta of I have to move it over so you can see what we're looking at. About 2180, 2280, 2355 butterfly. That's what we're looking at right now. If I change this to what these actually are here, this option chain right here is 2450, 2375, 2275. Let's see if I can set that up here. I'll ignore my equations here, just set that up. So I've got 2275, 2375, and 2450. You can see that the delta here is 7.05, 7.05. The mark is 2705. Here's the mark right here. It's changed a little bit. 2705. The spread is $5.30. All they did is I added up the spreads of the individual options themselves. The profit and loss to the downside is minus 41,640. If I come up here, it's not updated quite right here. Oh, I may have the wrong one checked here. Let me take it here real quick. Yeah,
Ted suggested to go to data in Excel and refresh all. Unless he's talking to Chuck. Chuck's trying to figure out how to connect a spreadsheet to Excel. Maybe we can circle back to that.
Yeah, you can always refresh the spreadsheet by hitting F9.
Okay. Okay, so the profit and loss to the downside is 41,640. Here's 41,640. Profit and loss, the upside, 21,640, 21,640. So the information is coming in correctly. The position theta is 203.616. The theta here is 203.6, well, it's 59 here. Now, in doing this, in creating the spreadsheet, what I found out is when you're in Thinkorswim, in the setup, there's an option for the application settings. In order to import the information correctly into TOS, I had to display as many decimal places as I could for the Greeks because there's a round-off error I set up my TOS initially to just have 3 decimal places for the Greeks. And what it was doing is when it was exporting the data, it was rounding the information that it sent. And I was not getting, the roundout errors were pretty significant in the spreadsheet that I put together. So I found out when I upped the decimal places for the Greeks, I was much better able to import the data into TOS, or into Excel. You know, the equations that I saw were much more accurate. So basically, what this allows you to do now is create OPRA code strings and set up, you know, whatever kind of strategy or position you want to use in a series of columns just like this. All you have to do is set up the columns so that it comes in, you know, with the positions that you're looking for. Now, I set up these equations over here so that when you look at, when I group the geometry together, and what I do is I shift this shape basically down from the original, you know, from the beginning, from the start position. So if I choose to have a 75-point upper wing and a 100-point lower wing, I'll shift this 5 or 10 points at a time down to the left. And it'll look at all of the information and tell me what the geometry is of that specific set of or group of broken wing butterflies. What I then did is I created a whole series of these tables or groups and said, okay, I want to look at a butterfly that has wings of 175 points. And I'm going to start with these strikes, and I'm going to just go down 5 points at a time. If I want to look at the same information, I can look at a 60-40 butterfly or a 75-50 butterfly. And what it'll do is it creates a butterfly that has 75-point lower wing, 50-point upper wing, starting below the market, and there's the OPRA codes. And then it will cycle down 5 points at a time, and it gives you that same geometry for a 75-50, or say I want an 80-60. And what you can do is you can search whole groups of broken wing butterfly configurations, and you can set up this conditional formatting so that if you're looking for specific information or specific criteria to return, you know, an answer to you, you can change the color of the cell, or you can change the formatting of the cell to tell you if you're getting whatever information you were, you know, that if the information you're getting is within the criteria that you were looking for. And here's a specific example. On this cell, I said, this is a spreadsheet that I set up for my Mango. On my Mango, I want my position delta to always be under 3 times the number of lots, which in this case I have 8 lots. So that would be, if my position delta is under 24 or negative 24, I want this to come back and tell me, yes, you've met your criteria. As you can see, all these other cells are larger than 24, so they do not color. When you come up with the conditional formatting, what happens, you can come back and say, you want to create a new rule, and this little spreadsheet or this little dialog box comes up. Well, you know what? I think I'm going to take a time out here just for a second. Are there some questions that I should answer, or does anybody have any discussions to add to what I'm doing here? Otherwise, I'll talk about a little bit, because I felt like I've gone through some of this stuff pretty fast.
Well, probably one of the first questions is, how do you connect Excel to Thinkorswim? How do you get started?
How do you get started? You have Thinkorswim open and you have Excel open, and you type that formula in. That makes the connection.
So RTD is a built-in function to Excel, and it'll find Thinkorswim, or do you need to do anything else?
You do not need to do anything else. You know, the actual formula is, I'm sorry, it's this RTD function. Okay. So the formula is, let me just take this out and show it to you.
And then, do you know if there's a list of RTD fields available?
There is. Let me go back to John Locke's presentation. John Locke, there are more than you even want to know. And I would share this. Basically this information that John Locke put together. But I think I really need to check with John. All I did is I copied down from John Locke information that he put in those presentations that I referenced. For the next, I think probably for the next 10 pages, it's nothing but these RTD functions that you can export from Thinkorswim. It's page after page of information that are defined by Thinkorswim that you can export. Last X, last size, last, intrinsic, implied volatility, low, LX, mark change, mark percent change, all this stuff is available. And you can see I'm scrolling down, I'm going through pages and pages of these that are available. And they're all listed on that presentation that John Locke put together. So that's basically how you get this to make the connection. If you have Excel open and you have TOS open, that's how you make the connection. You use that formula, the RTD formula. So let's copy that up here and I'll show it in a larger size. Oh, let's see. There's the basic formula right there, and all of those defined items are in that bid right there. It's the standard configuration of that function is equals RTD parentheses TOS.RTD close parentheses. You have to have a comma, then a quote, and here's where you put bid or last or delta or theta or whatever item you're looking for. You have to use the correct definition from TOS, but if you put that in there and then you put the correct OPRA code right here, F21, if you reference to a cell that has the correct OPRA code, you will get what you're looking for. That's what this formula brings. So in here I've got bid. I'm looking for bid, I'm looking for ask. I calculate the put mark and a spread. So then I'm looking for open interest, there's open interest, and I'm looking for delta. I've also done the same thing with theta. I don't know that I've got that listed in this spreadsheet right now, I don't. But I've also, gotten theta and volatility just by simply putting in the correct term in this formula, and that's the only formula that you need to get the data from TOS. Everything after that is manipulation of that data in Excel. So if you understand Excel, the key things to being able to use Excel are understanding this concatenation. If you understand that, if you understand how to create and use if statements, if you can use conditional formatting, that really helps in interpreting the output. Because we're using, strike prices that are even numbers, you have to understand what rounding is in Excel, and then you have to understand the max loss formula. I'll show a couple of these things right now. This is the formula for the max loss right here. This one I searched all over the web to figure out how the heck do I calculate the max loss as the strike prices move around, because I could calculate the max loss for an individual broken wing butterfly. If I was below if I started my calculation at below the money, I could make this work. If I started it above the money, I could make it work, but I couldn't make it work as this shifted around. And somewhere on the web, and I cannot find it anymore, I found this formula. basically A, B, C, and D are strike prices. C is a strike price that you have to calculate. So the formula for calculating C is equal to D plus the difference between B and D, B minus D. Now this would be the short strike right here. This is the upper long strike. This is the lower long strike. Those are three that you know. So if you want to know what C is, which is basically the equivalent of A, but what happens is as these move around, A moves up and down because you're actually calculating minor loss and what I call minor loss right here and maximum loss right here. The formula is C is equal to that point right there. C is equal to D plus B minus D going up this straight line minus A minus B, A being higher than B. So that reduces to 2B minus A. So if you want to know what C is, it's 2B minus A. The max loss then is equal to C minus D. If you plug 2B minus A into that C minus D formula, the max loss is equal to 2B minus A minus D. And that's the formula that I've got in those cells that calculate right here, and it equals what you see in the TOS spreadsheet. In the TOS, that's the formula that I have in that cell right there. Now, if you then look at the minor loss up here, basically, if you know what this is, you just go up that line, down that line. It'll get you to the minor loss. You know, reducing the formula. You know, after you taking out all the terms, basically you take the max loss plus A minus D, that gives you the minor loss to the upside. So after you've made that calculation, all you have to do is you have to multiply whatever your strike prices are by 100, and you have to multiply it by the number of lots that you're going to be trading. And that tells you what your profit and loss, maximum loss to downside is, or maximum margin. It also tells you the profit and loss to the upside. So that's what those two cells calculate. If you're interested in those things, if that ratio is important to you, that's how you calculate those numbers, and you can basically manipulate those numbers. The other thing that you need to do, that you need to understand when you're doing putting in these OPRA codes, is you need to understand how to round, because the current price is 23.6848. Well, what does that do for you? You can't. That doesn't get you to any option strike price. You have to be able to round this number into a number that's usable to create the OPRA code. When you do that, let's take a look at this. Here's the rounding. Let me show you how the formulas that you use for rounding. If you're rounding, if you want to round to a specific digit, the Excel function it's just called round. Round, that's a cell right there. And if you round to 0, it means you're rounding to an integer. If you round to 3, it means you're rounding to 1,000. If you round to -1, it means you're rounding to the decimal. So in this particular case, if you take 101.4 and you round it to the 0 digit, the answer that returns is 101. If I round up, what it does is it takes whatever this number is and it rounds up to the first digit above whatever's defined by the second argument in the parentheses. In this case, it's 0, so it rounds to the integer. So if I have 101.4, it'll round to 102. If I round down to a 0 integer, it'll round to 101. But with the OPRA codes, the strike prices come in different increments. So some of the strike prices come in increments of 5, some in increments of 2.5, some in increments of 1. If you want to round to an increment so that it'll always give you a correct strike price, then you need to round to in this case, you do an M round, or you can do a ceiling or a floor. Ceiling means it's going to round up. Floor means it's going to round down to whatever the second argument is here after the comma. In this case, if I'm going to round to if I'm rounding to 2.5, I'm always going to get an answer that's divisible by 2.5. So if I put in the number 101.4 and I do a M round of 101.4 to something that's divisible by 2.5, the answer it comes back with is 102.5. If I want to round up always, I put in ceiling. In this case, I put 5. It's going to round 101.4 up to the first thing that's divisible by 5. In this case, that's 105. If I put in floor, it means it's rounding down, and I want it to round to a something that's divisible by 1.25. If I put 101.4 in, it's going to round it to 101.25. And that's key to the OPRA codes because you have to look at what the available strike prices are. And if they're 5, you need to put in this round function so that you always return a 5 when it looks at the strike price and you want to get an option price. You need a number that's divisible by 5. So when we come back and look at this spreadsheet, all these numbers are basically, the first number that's created is rounded from that number, from the 2368.12. I round that to a function, and what I'm doing is, this is the width of the strikes. This cell D3 is width of strikes, and the width of the strikes is, I define that in I3. The reason why these things are spread apart from each other is because when I put this spreadsheet together, I hid a lot of these cells because there's a lot of information in here that you really don't need to to understand what the answers are. So if I hide these columns, you see how this comes together. That's why it looks funny, because I unhid some columns for this presentation here. So the width of my strikes is 5 points. When I come down here, you'll see that all of my strikes are on the 5s. If I change this to 10, and I come down here, I have to change this to a 10 also to make sure that I get, so I always get the items that are 10s. Oh, this is, I changed, let me change this formula back to what it was. The reason is these 3 numbers right here, I just typed those in. That's why it's not coming back with a correct answer right now.
We do have a couple other people as panelists that have some stuff to share too. So are you getting close to where we could wrap up? And
actually, yes. I think I've about covered everything that I wanted to show. I just wanted to show people how to do, the things that you need to know in Excel in order to put one of these things together. So that's what I've. So anybody else that wants to talk now, that's fine. I probably covered more than I was, expecting to, anyways.
And Neil, if you have anything that you'd like to share with the community, like your slides or the Excel spreadsheet, just email them to me and I'll attach them to the recording. Okay, I'll do that. I think that, I wouldn't mind giving John Locke stuff, but I think that we really need to get John Locke's permission for that.
You don't need to. If you need to end up giving a list of, if you need to give a list of the field, I ended up putting in another link. Okay, so you can get the fields. Well, and I also asked John on Skype while we were doing this. He said it was okay. Yeah.
Okay, so if it's okay with John, then I'll send that stuff to you.
Okay. All right, Norm,
let some other people talk now.
Norm, are you still here at the phone?
I'm still here. Yep.
All right. Do you want to? Do you have something you want to share now?
Yeah. How do I show my desktop here?
Giving you the presenter role. Yep.
Let's see. Just tell it to share my screen.
That's it.
There we go. Gosh, it works.
It does work.
Okay, the basic thing I wanted to show was how to get a real-time display of your campaign profit and loss for anything you want, anytime you want. And the way I do this is I keep track of each trade on a spreadsheet, and what I've got is some templates, like you see here for a condor. And what I do is I take the symbol for the spread or whatever it is I'm using, and I just copy it into the template. And I use the RTD function to come up with the option price right here.
Hey, Norm, we're looking at where it says, thanks for using WebEx. Do you have like another screen?
Oh, okay. I got to put it on a different screen here. Okay, hold on. Scoot it over here. There, can you see that?
Now we can see it.
Okay, we'll go back here. So anyway, what I do is I keep track of each trade that I do using some templates. And like here I have a template for a condor, and I take the symbols for each of the positions, I paste it into the template, and then I copy it and I paste it into an area where I keep track of each trade. And when I paste it in, I paste it so it forget what it's called here. Let's just try one. Okay, we copy it. And then insert copied cell, that's the one. So what you do is I've got every trade in this campaign showing this part of the spreadsheet. In this case, I've got 44 trades, or actually 40 trades. And then the total credits, total commissions, and total position credit shows down at the bottom here. So that's basically what I've spent on this position. Now the trick is I take this whole thing. Come on. And I create a pivot table. So I go up and I say insert pivot table. Am I going too fast with this?
No, it looks good.
Okay, so I insert pivot table. Then I go down to where I have this pivot table set up. And I paste it right here. Oh, shoot. Well, anyway, I pasted there. And let's, well, heck, I'm going to have to do this so you can see it. Okay, get rid of it. We'll try this again. Okay, insert the pivot table right there. Then it asks me what columns I want to do, and over here it allows you to select the columns. And so what this does now is it shows the net result of all the trades that I've made. And I don't know why this is not working. Well, when it works, it shows up the mark for each of the trades, and it adds them all up, and it gives you a total down at the bottom here for the total of your open positions. And then I just add the open positions to the current value, and it shows me my true profit here. I'm going to try magic tweeter here. I don't know what's wrong here. This is not working properly. Let me go to another spreadsheet with this one. That's a bad one too. How about this one? Here's one. It's got a whole bunch of positions. So you see all the positions here, and then the total profit shows here. And then I have another spreadsheet where I group together all my trades. Over here shows all the current profits. And this is updated constantly and automatically. And then I basically look at the difference between yesterday and today and look to see what's changing. So that's basically the trick, is the insert pivot table function. And behind this are lots and lots of formulas that I can send you a spreadsheet if you want, showing how all these formulas work. But some of them have to do with the RTD function, and others for the futures trades. That is a real pain in the neck. But what I do is I put in the future option code, and it calculates all the strike prices, the expiration dates, what have you, and the mark prices. But there's a lot behind this. I'll show you some of the columns here. Just to calculate the expiration dates from these future symbols is a real pain in the neck. You see there's lots of calculations done here. So that's about it. I don't know if anybody has any questions, but if you have any detailed questions, it's best if you look at the actual spreadsheet. So anything else?
So, Norm, this is Neil. I just had a question about, so if you're putting in, what you're doing is you're putting in the symbol and calculating the expiration date and extracting all the other data from that symbol that you insert?
Yes, that's correct. I copy the symbol out of TradeStation, Thinkorswim, I mean.
Oh, okay. It's kind of the exact opposite of what I did.
Right. I mean, I've been thinking about doing what you do, but I haven't really found a need for it. But what you're doing something completely different than I am, and
right.
This is just another way. This is basically a way to keep track of all your trades. Because I got terribly confused when I started doing this. Like when you have a whole bunch of trades in a campaign, keeping track of the totals of each of the options, and this is an easy way to do that. So the trick is the pivot table.
For new users at Thinkorswim, they might not know how to copy the symbol, the OPRA symbol. Can you maybe just show that real quickly?
Well, it's not something you can actually copy that I know of. I look at it in Thinkorswim. You can right-click on a symbol. It'll right-click and look at market depth, and that'll show you the actual symbol.
No, but if you do this, if you end up going to almost any field, if you end up right-clicking, you'll end up seeing a copy.
Well, yeah, but that gives you the whole trade.
No, you click on the individual. You click on the individual strike. Like if you go to the Analyze tab.
Do you have your? Yeah, it looks like you have your Thinkorswim open.
If you have a Thinkorswim open, I can end up showing you real quick. What you do is you can go to an Analyze tab, pick any of the strikes. Okay, right-click.
This is under the Add Simulated Trades.
Yeah, you can go to, I don't care where you go. You can go to an Analyze page, or you can go to a Trade page.
Okay, well, I've never been able to get that to work. All I get is the market depth. If you say it's copy trade, you get a whole bunch more stuff.
No. You're looking in the wrong place. If you open up Thinkorswim, otherwise I'll end up showing you.
Maybe you should show it.
Yeah, I can. I do.
All right, let me switch the presenter over to Jim.
I just need 1 second here. Okay. Share. Let me just make sure I'm sharing the right screen. Okay. Once you end up going to any trade page, you can go to any trade page with all products. You know, put it in if that's where you end up spending a lot of time. I tend to spend most of my time on the Analyze tab. You can go to the Analyze tab, and let's say, I have this position right here. Okay, all I have to do is I have to hit right-click any place on here. Okay, copy the symbol. Okay, go over to a spreadsheet. Come over here, hit Control-V, It would help if I put it here. Hit Control V, and it'll paste it. And there it is.
Oh, cool. Okay, well, that's quicker.
Okay, and more accurate, right? You can't make a mistake that way. Okay,
right.
Tom, if you want to give the ball to the next person.
Yeah, let's see. Rick, did you have something you wanted to share still?
Oh, I guess. I'm a kind of a summation of both of these guys together.
Okay, well, it's always good to have some variety. Giving you the ball.
Where are you at?
And Tony, I don't know if we're going to have time to get to you today, but this is obviously a popular topic, so we might do a part 2 to this, maybe next week or the week after. There it is.
There it is. Yeah, that's so basically. If I go to CME, they give me all the expiration dates and that information. So I come here, so I go out there once a year and copy the expiration dates that they give me here. So for February through February 18, and I put this in a spreadsheet, which I then will transfer the corresponding date. So I get the symbol and then the option code here. And for mine, I'm lazy in the aspect that I create the actual, this is input, so depending on which contracts I'm using, but for oil they come in 50-cent increments, so all I have to do is tell it it's, like in this case it's a P40, so it's a 40 put. Enter that, and then from that point on it populates all the mark, bid, ask, value. This is my column that I use for making adjustments off of. So when I get to 1.5 times, I'll look to start closing out this and rolling the position down, which I got other specific places to do. The spread between bid, ask, the probability is going to expire in the money, touch, out of the money. Open interest, volume for the day, volatility, delta, extrinsic and intrinsic. So this guy right now, which is $2.15 in the money on today's sudden decline. And I have all the rest of the delta thetas, so I can keep track. So I have a total position as to what my delta currently is, 1,479 on this particular trade. Everything it populates itself. The other thing is, as I close out a trade, I copy and paste the first 4 columns here and move it down and fill in, copy and paste it here, and then all I have to do is enter the date it was closed and the amount that I paid for it. That information calculates a profit or loss on it, which I then end up in my summary page, which you can't really see all of, that gets sent over into this. So since oil is not one that the brokerage houses sends the IRS a detailed report on, if you want to be legal about it, this gives you a legal calculations for your P&L for the year to turn in on your tax record. So I just copy this and submit that with my tax form. But I've tried to automate it and keep tabs on various information that I'd like to, keep records of for future reference. But anybody have any questions? If I can find the chat window here, since we did that was kind of a quick explanation there. I know we're running out of time, so anybody have any questions? As I say, this guy, I don't have to, calculate symbols or any of that type of stuff that everybody else is managing to do, because I create it in one spot and then I use that for the rest of the calculations. In oil futures, this stays the same. I don't have any weekly stuff, so you might have to have a weekly version of that and a monthly version, depending on whether you're doing weeklies or monthlies. And you could just use the correct location for what you're doing.
Any questions for Rick?
There was one in the chat about how much
of the option chain. I'm calculating 16 up and 16. I fill in this area right here. This is a variable. So I pick a value that is close to where I think it's going to expire at or move between. In this case, it's 56. So I go from 56 to 42 and then 49 to 64. So if I change this, I can change this here to 59. It goes back and calculates everything and repopulates it with the open interest and the various strikes and strike values for those particular strikes. The put side and the call side.
One of the questions was how much of this can you get just from the Thinkorswim page versus what are the additional calculations that you're doing?
You can probably get everything here from the Thinkorswim page. The only calculations, I'm not really calculating anything here. This is just straight, open interest in concatenated. I concatenate this value, D1, which is this one, and then F8, which is, in this case here, be this guy right here, which is 42. So it calculates the open interest for a P42 put. Is that what you're?
Yeah, that was the question. I was just reading it. It was in the it was a question from Daryl in the chain.
Yeah, no, and the others down here. This is, like it indicates here, this is the midpoint or mark. This one here will be either bid or ask, depending on whether this is a long or a short. So in this case here, this is the bid price for this guy. So in effect, I paid 2 cents for it. Right now, I could sell it for 3 cents. The P52, I sold it for $1.12. Right now, it's $1.68. So for me to buy it back, the ask is $1.69. The mark is $1.68. So, and this keeps a running total as to where my P&L is for the day. Right now, yesterday it was 3,600. Today it's 860. Right at this moment. So as price fluctuates and changes,
you just lost $100.
No,
sorry.
Darn it. I hate it when that happens.
I know.
Yeah, it reached as you can see by the red symbols up there, it's reached an adjustment point.
Well, very good, Rick. Really appreciate it.
That's my 2 cents. As I say, I made it mine easy for doing taxes and having instant knowledge as to where I stand on profit and loss.
Somebody asked, can RTD be accessed from Google Sheets? Probably not, but I don't know. Has anybody tried that?
Never tried that. You can use Open Interest if you don't like Windows. It works well with that. I guess I can stop sharing.
Okay, so Gary says no, you can't do it from Google Sheets. All right, well, we're a little over an hour. It's probably a good place to stop. I know Tony had something to share with VBA, but maybe we'll do that in another one where we'll go a little bit more advanced with some Visual Basic type of stuff. I know Paul Demers does that kind of stuff, and there's others too in the community. I really appreciate everybody sharing and participating. This has been really fun. I'm writing up an extensive description with all the links and different comments people have had, equations, etc. So that'll be available shortly. And any last comments before we wrap it up? Jim, thanks for coming, and everybody else too.
Thank you, everyone.
Okay, I'll go ahead, Rick.
Everybody have a good day.
All right, we'll see you. Thanks again, everyone.
Bye.